Welcome, Mr. Gnome, and welcome to this crypto update. Today's update is going to be massive in regards to regulating crypto because we have a 166-page report coming from the White House, which we'll take a look at. Then we will look at Europe's response to that report, or they actually made the response before the report came out, but I'm sure they had access to at least some of the information already. And also, we will take a look at a bunch of crypto buying basically across the board and other crypto news. Then we will look at the fundamentals, and obviously we will look at the prices in the short term. But as you can see, just the quick glance, this is basically my big view here, this inverse head and shoulders pattern here. We had the breakout, we basically had the retouch already. We could still have the retouch basically to $113,000, but it seems less likely because when we go to the short-term view, you can see that Bitcoin is basically breaking out already from this trend line here, and it's kind of making a new trend line here. So it's not exactly breaking out 100% yet, but all in all, in my opinion, the direction seems to be upwards. Now let's head over and take a look at the most recent developments in regards to regulating crypto. So first off, SEC has now approved in-kind creation and redemption for all spot Bitcoin ETFs. And this is going to be important because people, especially old whales, they have a bunch of Bitcoin laying in large wallets. And for them to have more security and to potentially even pass the ownership to their children, it might be better for them to put the Bitcoin in the ETF. I'm not saying that self custody is bad. I'm just saying that for some people, it might be better to have custody through an institutional ownership. And also, if people want to hop out of the ETF, they can simply redeem their Bitcoin. And based on these new rules and regulations coming from White House, they might not even have to pay tax for hopping on and off out of these ETFs when they are done in kind. So this is a very important step in that regards. Now we also have a new report coming from the White House, which is in this page here. I will link this in the description. There's basically 166 pages of regulation here. And I'm not going to go through all of it. It basically shows how Chainlink works, how crypto works, how the market caps have fluctuated on and off. But basically, this comes out of sorry, I'm sorry about your eyes, but this comes out of the 180-day order that the White House gave on January 23rd. And this report basically gives all of the recommendations in regards to crypto as of now. These may change in the future. So let's actually take a look at the recommendations and let's jump to that section. So now we're on page 145 out of 166. So there's basically 20 pages of recommendations in regards to regulating crypto across the board. And there's some things that I do like, there are some things that I don't like, and there's a bunch of things that basically go over my head, or I think it's not really that relevant for us crypto investors. So let me skip over to the juicy parts here because there's so much uh, let's say like an extra here that really doesn't matter to us. So let's go all the way down here. So one of the most important things coming from the White House is basically regulating stablecoins and payments. So the first thing that they said basically when Trump was campaigning is that he opposes all central bank digital currencies. So here again, they come out and say discourage, oppose, and prohibit the ability of any agency from undertaking any action to establish, issue, or promote any CBDCs in the United States or abroad. And this is basically a blowout against European Union, which has been developing a CBDC for the longest time. Basically, United States is now saying that no, stop doing that. We will not accept a CBDC coming out of the European Union. So that's basically settles that conflict. but then I will come back to the EU section later. But anyway, that's basically what they're saying here. And they also support legislation prohibiting the adoption of any CBDCs in the United States. For example, anti-CBDC Surveillance State Act, which was already passed. And this is interesting because on the flip side, they say that we don't want a CBDC, but then there's something else. So let's take a look at that. So now we're talking about promoting the competitiveness of the US dollar. So they encourage and provide clarity to US financial institutions in leading the efforts of basically adopting stablecoins as a cross-border payment system and also as a domestic payment system. So they want financial institutions to use stablecoins. Then they want to promote the private sector's role in financial intermediation. So basically, what the United States wants to do is not to issue a central bank digital currency. They want to issue a uh, private digital stablecoin that basically is owned by Donald Trump, and that's what I've been talking about when Donald Trump created the World Liberty Financial. That is his way of becoming basically the central bank of crypto. And all of this legislation here is basically supporting the monopolization of stablecoins in the United States and also in basically the vassal states under the leadership or under the custody of United States. So domestically and internationally, US authorities should encourage payment solutions that protect basically private sector's role in financial intermediation. So they want to create these monopolies that control basically the financial markets. Then at the same time, they basically want to implement robust and effective anti-money laundering schemes and sanctions controls. So in case there's any illicit financing or unlawful use of stablecoins, they can basically freeze your account. They even had a big explanation and a screenshot how they can freeze accounts with the stablecoin accepted stablecoin issuers. And as you can see here, they want to upgrade domestic payment systems and cross-border payment systems to help protect the primacy of the dollar-based international monetary system. And like I said, the real goal here is to monopolize the stablecoin market under the wings of Trump and his family. Then they have a huge section here, basically countering illicit finance. And I'm gonna skip this section here because they basically repeat the whole thing under here as well. So they want to modernize suspicious activity reporting. They want to directly be able to solicit sanctions compliance information, and then they want to target foreign digital asset exchanges or digital asset transactions involving criminal or state actors. Now, what is going to be criminal? That's basically up to Trump and the White House and whoever comes after Trump as the president of the United States. What is lawful and what is unlawful seems to only matter who is in power at any given moment in time. So whatever illegal stuff they want to do, they can do, but what they deem illegal, they can block. So here you can see that they want to apply full blocking sanctions. They want to allow the use full range from applying full blocking sanctions to more calibrated restrictions to target malicious actors seeking to harm Americans and to limit the access of foreign digital asset actors engaged in illicit activity to US markets in support of the Trump administration's priorities. They even come out and say the word directly. So anyway, that's basically the update on uh, countering. Well, actually, there's more. So advancing privacy through digital identity and related tools. So one of the reasons why I personally supported Trump was his stance against the central bank digital currencies and to protect privacy. But that has now gone out the window. And what instead is coming is a full digital identity dystopia. So they want to implement customer identification in digital asset scenarios. They want to implement National Institute of Standards and Technology digital identity guidelines, and they want to evaluate lessons learned in the project, accelerate adoption of digital identities on mobile devices, customer identification programs, defining, mandating, and enforcing customer identification, detecting, deterring, and investigating fraudulent transactions, detect illicit activity, including with respect to digital identity verification, and they want to utilize digital identity solutions within their existing customer identification programs. So basically, what they want is a full transparency. Whoever uses the blockchain, you cannot hide your identity. It seems like that is the scheme they're currently playing, and well, that's basically the plan. Now, some good news is coming also is that they do have some recommendations on taxation. So they want digital assets to be treated as a new class of assets for federal income tax purposes. And there are some actually good uh, recommendations here. So first, they want stable coins to be treated basically similar manner to cash equivalents, which means that if you transact with stable coins, then there's no tax implication out of that. I don't know if they want this to basically apply for other countries as well. So if other country residents use US stable coins, that they would also not have to pay taxes if they do that. Uh, I'm not sure if that's the case or not, but at least in the United States, these transactions would not have tax implications. So that would obviously be nice. And then also in regards to mining or staking, or even when you receive airdrops, that was said somewhere upwards of this document. But they basically want to, or they ask the question to Congress, what rules should apply? Uh, Basically, is it the fair market value of rewards at the time of receiving the assets or at the time of sale? And unfortunately, this recommendation does not exactly give a guidance, at least from my understanding, on which way they lean. But what I kind of believe they would like to have is basically the at the time of sale. I think that is makes much more sense than at the time of receiving the assets. Because sometimes when you mine or stake, you receive it at a very high price, but then when you actually sell, the price may have completely fallen off. So when you have to pay taxes, you may have to pay taxes on money that you don't actually have. So at the time of sale, in my opinion, would make a lot more sense. But that's just my opinion. And again, they want to require taxpayers to report foreign digital asset accounts. So this is basically them coming after your digital asset portfolios, crypto asset reporting framework. And one good thing here is that on DeFi, they don't want to impose any new reporting requirements on DeFi transactions. So at least some good out of that as well. So all in all, basically that's about it for the big news out of here. Other things that also came out of this is that banks can custody cryptos, banks can custody stablecoins. Those are good things, and they basically want to encourage the interaction between stablecoin payments and the real world. So that was a good thing. I didn't really see on the recommendations here anything regards to tokenization of assets. And maybe that will come in a different thing, or maybe it's here. I just did not see it. But let me know what you thought of this. Now let's hop over to what um, the European Union is saying about all of this. And this came out on July 28th. So they have now reversed some of their stances in regarding stable coins. So again, this is 28th of July, and this is strictly coming from the European Central Bank. And here they address that the stablecoins are reshaping global finance with the US dollar at the helm. Now, the this could also create financial stability to erode. So that is the danger here, according to ECB. But there's also an opportunity for the euro to emerge stronger. So they acknowledge Tether USDT, they also acknowledge Circle USDT, and they even go as far as talking about the Genius Act, and they talk about yield farming at some point. I guess it comes down the line here. I'll talk about that soon. But at the advent of stablecoins comes with a stark warning. So there's potential for stablecoins to undermine monetary sovereignty, transparency issues, and the risk of capital flight in the European Union. So the implications for the euro area are potentially far-reaching. United States are exploring the use of stablecoins, Walmart and Amazon, for example, even Visa and MasterCard. So that is now happening, and they are addressing that. They address decentralized finance, crypto exchanges, cross-border payments, and here you can see even yield farming and liquidity provision as well. In the past, European Union wasn't really basically tried to stop all of this activity because they want people to yield farm with with the government debt. Because if you own government debt, then they can basically print more money out of thin air and you get a little bit yield on top of that. But if you have access to your own yield farming protocols, that's basically a customer lost in their perspective. And that is causing harm to their understanding of the financial stability. But then here is where it gets interesting. So should US dollar stablecoins become widely used in the euro area, then ECB's control over monetary conditions could be weakened. And if that happens, that trend could be difficult to reverse. So they want to basically block the US stablecoin usage in the euro area if they can. But as you saw in the document I showed before, United States obviously does not want European Union to block the usage of US stablecoins. So they have some solutions here. So if this would also pass, then United States would be able to finance its debt more cheaply because more people in the eurozone will be using dollars, and for Europe this would mean higher financing costs relative to the United States, reduced monetary policy autonomy, and geopolitical dependency on the United States. So EU doesn't want US stablecoins. So here are the solutions coming from Europe. First, euro-based stablecoins. So they currently don't really support euro-based stablecoins, but there are a couple of euro-based stablecoins already, so they could basically double down on that. Second, and by the way, these would be privately owned euro-based stablecoins, which are already some of them are in the markets, but they really have very low liquidity, so not a lot of usage. Second, the digital, the CBDC of European Union is not said here as a CBDC, even though the digital euro means the CBDC project of European Union, but they no longer use this because of the document I just showed you, and that United States basically completely is against European Union creating a CBDC. So anyway, they say that the digital euro promises to be a robust line of defense of European monetary sovereignty. So European Union could come out and defy United States and create the CBDC anyway. And then they talk about the third option or third solution to maintain relevance in the future financial infrastructure, which basically means that they open the wholesale payment systems for these euro-based stablecoins. and obviously for digital euro if they want to implement that as well. So that would increase the usage of euro, and euro could be used even by perhaps Americans and other people across the planet if they would be accepted as part of their payment schemes in Europe as well. So that's basically tied to the first and the second point already. Now, finally, they want stronger global coordination. So without consistent rules, the current fragmentation may persist. And if they don't do a common approach, then they risk fueling instability, regulatory arbitrage, and global US dollar dominance. And they really want the euro to be a bedrock for others. So, in short, there's really no solution here. But what I think they will do is they will do the number two, but I think they will increasingly also give more support for privately created euro-based stablecoins. That's basically what I think the European Union will be doing because they are pretty stubborn, and until USA gives like a clear red line, they will continue to create the CBDC project over there. So anyway, that's it for the regulations. A quick glance of what was said here, and now let's talk about the purchases of crypto assets and other news. So Mara, which is the largest Bitcoin mining publicly traded company in the United States, they are implementing the Bitcoin treasury strategy, the same thing as MicroStrategy is doing, and they have now completed a $950 million offering of their convertible senior notes to 2032, long time from now, and they will be using this money to buy Bitcoin probably this week and next week. So in a matter of 2 weeks, we should see that they have concluded their purchases for now again. So that's obviously nice. That's future demand. Maybe some of the demand is already bought, but anyway, that is demand for Bitcoin. Then Trump's World Liberty Fi has spent another 1 million USDC to buy more Ethereum 23 hours ago, and that came out on July 29th. So the World Liberty Fi continues to buy more Ethereum whenever they can. And then Anchorage Digital has acquired 10,000 Bitcoin worth $1.2 billion. So that was a huge purchase, and that came out yesterday. And then Strategy has bought a massive $2.5 billion worth of Bitcoin, 21,000 in total, in a matter of 1 week. And this probably also answers why Bitcoin hasn't been dumping more than we thought. So a lot of buying on Bitcoin as of now, which is obviously good. And why this is significant is that this is one of the largest Bitcoin purchases in the history that Michael Saylor has ever done, $2.5 billion. So, well, this is the largest since November 24th, 2024, 8 months ago. I think they did like $5 billion here and here. So this could be the trend that for the next couple of weeks, we could see a couple of large purchases, or maybe it is a one-off. It's hard to tell, but all in all, most likely this Bitcoin is not going to be sold anytime soon. So that is fundamentally extremely good for Bitcoin. Then a whale likely related to Defiance Capital has bought 30,000 Ethereum in the past 28 hours. Now, I don't know for sure what is their long-standing strategy, if they are acquiring Ethereum as a reserve asset or a strategic asset, but all in all, they have bought a bunch of it, $114 million. But I think this came out on Monday. And then Sharplink Gaming has bought another 77,000 Ethereum worth $300 million as well. So Bitcoin purchases, Ethereum purchases, all kinds of purchases across the board. And then I just wanted to share this idea here. So Ethereum in 2025 is looking to do something similar that Bitcoin did in 2021. Basically, the charts are almost a exact replica. So what we could see for Ethereum is Bitcoin price basically did a 4x from this formation here. So for Ethereum, it could go to like $12,000 which would be almost a 3x from here. So let's see if that plays out. But that seems to be an interesting observation from Mr. Crypto. So I just wanted to share that idea as well. Now, looking at Bitcoin ETFs, we are not seeing the same kind of euphoria or mania as we're seeing on these Bitcoin treasury strategy uh, companies. As you can see here, we saw an inflows of only $220 million, $130 million, $160 million. And yesterday we only saw $50 million worth of inflows into the Bitcoin ETFs. So these have been tapering out. So I think these will continue to go to the upside quite soon as the ETF investors are basically joining the bandwagon. But on the Ethereum front, we are seeing quite big numbers here as well. So a couple of days ago, we saw $200 million worth of inflows. And today or yesterday, it says here only $6 million worth of inflows. But don't be fooled yet, because this does not count all of the inflows from yesterday. This is a partial information, so it's likely to be a little bit higher than that. Not a lot, because the largest ETF, the BlackRock, has already been counted in the number. But all in all, the Ethereum purchases have been quite high for now. Now, looking into the fundamentals, there's something very interesting here that I do want to point out, which is the stablecoin market cap. So unfortunately, the stablecoin market cap did not increase this week. So typically what we have seen is roughly $2 billion worth of stablecoins per week being minted. And then we saw this acceleration here until basically July 25th. And since then, the stablecoin market cap is still $229 billion. So that is a little bit unfortunate. And we're even seeing the USDC stablecoins drop down almost a $1 billion in their market cap. So that is obviously something that I don't want to see, but that is the reality. So I wanted to report that. But on the other hand, USDT is still growing, which is obviously bullish for Tron Network TRX. But that's the case with stablecoins. And then the other thing I wanted to show you is I got increasingly worried. I did not show you in the last update the holdings of 100 to 1000 sized wallets. They basically flatlined here, and because all of the other wallets are basically been selling, and this is the only wallet that has been consistently buying throughout this Bitcoin bull run, when it started to flatline here, I was like, okay, we could actually break to the downside here. But to my surprise here, we are seeing an increase in this regard as well. So 100 to 1000 Bitcoin holding wallets are now back in action, buying more Bitcoin once again. So that is obviously nice. So likely we will break out of this downturn soon, back to the upside. So that's basically it for the fundamentals. Now hopping over to short-term fundamentals. When we look at the liquidation heat map, we still have the same exact hot zones. Nothing has really changed on this front yet. So we have the liquidation zone up here. Sorry. I have a little bit of a flu. Sorry for that. So we have up here the liquidation zone, as well as down here at $113,000. So I would like to get this tabbed. Now, will it happen? I don't know for sure. I hoped that after Wednesday's Fed meeting, we would have gone all the way down here to scare off the long-term holders, to tag that inverse head and shoulders trend line, and take out the liquidity, the CME gap, and then we would basically have clear skies up here. But that has not happened yet. So it's basically a matter of time before one of these zones will be taken out. I don't know which one will be taken out first though. And it's not entirely certain that this bottom will even be taken out as of now anymore, but it's still likely to happen. But I'm not as optimistic. However, on the aggregated spot order book depth chart here, we are seeing an increasing amount of limit sell orders hitting the order books on the spot markets, as well as the futures markets are now hugely on the sell side as well. Now, that means that these when the trend goes back to the upside, there will be a lot of liquidations, which means that there will be a short squeeze to the upside, which is obviously what we want to see. But as of now, most of the limit orders are showing sell pressure and not buy pressure. So now let's hop over to the charts here. And before I talk about Bitcoin, I do want to mention Ethereum, because Ethereum is going to be important for us altcoin investors. And Ethereum here, I have to say, I did sell a little bit of my LDO when I saw Ethereum basically breaking down from this trend line here. So this happened. I thought, okay, it seems like we might go even all the way down to like $3,000 here, which would have taken us back to this trend line here as well. So I thought, okay, if that move were to happen, better I take some of my LDO out of the table. And then what happened yesterday or the day before is that Ethereum pumped back above this short-term trend line here. So now it seems like Ethereum would really like to break out of this long-term formation, which I already showed by Mr. Crypto, this trend line here. So if Ethereum would basically break out over $4,000 and then break out this top here, $4,100, then it would mean that Ethereum is making for the previous all-time high, which is roughly $4,800. And if it breaks that, then we could see much higher numbers on Ethereum once again. So I really hope that Ethereum would continue to the upside here, but we are not out of this resistance zone yet. So if you want to be really careful, you may want to actually exit Ethereum until Ethereum price is above $4,100 up here. Because if it goes there, then it's likely that the momentum continues to the upside. As of now, it's a little bit of a danger zone if Ethereum would drop to this $3,000 level, basically back to this zone here and this trend line. So that is a possibility. Currently, I'm still opting to hold on to my longs because I see that the Ethereum staking ETFs are likely to come in Q4 of 2025 or Q1 of 2026. And LDO, in my opinion, is just massively undervalued in comparison to Ethereum. And Bitcoin seems to want to continue to the upside after breaking from this inverse head and shoulders. So overall, basically the plan is still playing out. Like I showed you here in the past, 130K is the next stop here that I want to see tagged about here. And after that, I would like to see higher, but 130K is a area where I will probably take some capital out of crypto that I will not reinvest back in unless there's going to be a major pullback. So 130K is a major sell zone for me, and then I will try to aim for 150K in later 2025 as well. Hopefully we will get there soon also. But in August, I think we will hit 130K. That's basically still my expectation. Now, if you want to trade these markets, if you are looking for an exchange to use crypto or buy crypto, I basically use Bybit and Phemex myself. There's links in the description if you want to use those. If you want to support this channel, consider subscribing, like the video, leave a comment down below, join the group. Discord group is completely free. And if anything happens on the markets in real time, I give my updates there. If I change my stances or you want to ask any questions from me or some of my community members, you can join the Discord group as well. Anyway, that's it for this video. Thanks for watching. I will see you on the next one, and bye bye.